got another one for you in the meantime as we try not to pass out here. We're going to be talking about Smile Direct earnings, which has had a very choppy after-hours trading session. You see up, down, up, down. What is going on right here? After being down 5% in the normal trading session, down another 3% after hours. So let's take a look at these earnings and see what they have to offer. So they missed on a GAAP EPS standpoint by 8 cents, posted a negative 28 cents number. You know, I'm not a huge fan of non-profitable companies, so definitely not a beautiful number for me to look at here. Revenue was actually up 10.7% year over year, but they did miss by 18.36 million. But it is a good increase year over year, 196.65 million. Yeah, nothing crazy there as far as those numbers are concerned. Obviously, you'd like to see beats on those aspects, but clearly the revenue estimate was pretty high. And the EPS, with everything going on, you kind of expect it to be hit pretty hard, even if it's a company not necessarily 100% involved with it, but just every company's got a lot more expenses going on right now. So, total revenue up 10.7, net revenue up 9.1, net loss showed a 42.9% decrease year over year, pretty big. Non-GAAP EBITDA 999% decrease, holy frick. Cash consumption, they spent a lot more cash. Wow. Aligner shipments were up 12%, and average sale price was up 2%. Aligner being obviously the Smile Direct is known for their Invisalign braces, or their, you know what I mean, their send at home braces type thing. They're not braces really, but they are teeth straighteners and teeth whiteners. So they carry multiple things, but kitten scan volume down 40% over the last 40 days. Yeah, I mean, that's kind of what you expect. Big hits on that aspect. I could have seen maybe some potential gains, you would have thought, as people weren't able to go to actual dentists. Maybe you should have seen them getting a gain, and maybe they will from this, but they have a big opportunity ahead of them. New debt facility established with HPS Investment Partners that will be used to refinance its previous facility. The company will have around $420 million in cash afterwards. So, talk about raising debt. They were nice enough to present a slideshow for me. This person probably needs to get a little bit of a haircut. The hair is just a little overboard. I'm sorry. It's 10 times the width of your body. So here is just some gross pictures, but there's some nice ones. Some before and afters. Makes me feel gross about myself. Clearly they were playing the game where you gotta be like, oh gosh, they're playing the the game where you have to have that plastic thing in your mouth and say those phrases that are hard to say. You know what I mean? Because you can't say B whenever you got it in your mouth. Stuff like that. Our mission is to democratize access to a smile each and every person loves by making it affordable and convenient for everyone. They're a global medtech platform with unique value propositions, as they might say. They have access convenience, for sure. They're a mission-driven brand with positive member experience, omni-channel presence with large Smile Shop network, exclusive licensed doctor networks across the U.S., Canada, UK, Australia, New Zealand, Ireland, Hong Kong, and Germany. And it is true, your dentist might be recommending Smile Direct Club. They might have already because they're partnered with them. And trust me, I don't think you understand this, but dentists get a lot of their money from partnerships, which is why they advise you to, hey, just like me, get your wisdom teeth taken out, and then you hate your life. But my doctor or my dentist got plenty of money from referring me to an oral surgeon. So that's how dentists tend to get some good cashish. Just telling you that right now. Referrals like Smile Direct probably pays them too. Smile Pay Captive financing increases accessibility and reduces purchasing friction. So financing your braces, kind of. It's hard to call them braces, but vertical integration powered by Smile Check allows us to optimize every step of the member journey. And their visionary founder-led company with a history of disrupting incumbents. That's right, baby. They're focused on taking the top spot. They have 1 million members treated with aligners, Invisalign as you might call it, but they are located in 3,800 Walmart stores currently, and 250 licensed orthodontists and dentists are, supporting their products. Smile Direct Club has built a brand. I don't know why I can't speak there. Smile Direct Club has built a brand at scale that our members love. We compare member satisfaction scores across those of other DTC direct-to-consumer competitors. That's right. Still no sleep, but I still know what DTC means. You can't stop me. And traditional DSO providers and consistently tracking higher. As you see, Smile Direct Club, very positive Google reviews here. While competitions they just don't meet the marks. Okay, they keep getting poo-pooed on. But consumer ratings 4.9 stars on this bad boy. People love them. Better Business Bureau rates them an A+. Very cool for them. It's exciting. They are just nice. So aligner gross sales price, you see over time that number's been pretty consistent around the 1,700 mark. Total unique shipments has increased significantly, and it keeps increasing pretty well. Q2 2019 was the only exception where it kind of went up quite a bit and then it decreased, but they're back up to those numbers again now. And the gross revenue, you see also increasing quite substantially as well. Pretty nice. Total net revenue, though, good numbers there, increasing the total net revenue back to beyond where they were in Q2 of 2019. So very nice there. Very nice on that aspect. So, yeah, 12% year-over-year growth in shipments is pretty big. So that is a pretty big increase. 11% in terms of revenue is a good year-over-year increase for this company. They're doing something right, obviously. Pretty exciting. Gross margin was 70%, a 288 basis point decline versus the prior year. Declines were due to cost incurred through the end of March, even though we closed our facilities on March 20th. So again, no one spared from the current pandemic by any means. So gross margin fell quite a bit, but it should be coming back to normal after we are done with this. Long-term target of 85% of revenue remains intact. But marketing and selling, you do see an increase in marketing expenses. But they're also increasing their Smile Shop count, people using their website. Pretty exciting for them. Yeah, that's pretty exciting, good, all things considered. So general and administrative, you see a little bit of an increase here, but quarter over quarter it did decrease. Nothing crazy going on. As a company grows, you'll typically expect to see these expenses increase as well. So that doesn't shock me. Net income, not beautiful. I'll tell you that. The adjusted EBITDA, clearly not a number you're looking for, because that's just a declining number, and the net income's declining too. So that is one thing that you can be concerned with on this company, is definitely that's a not good number there as far as net income. And I like my companies to be profitable. I do. So balance sheet highlights, we'll get into the actual balance sheet afterwards. But SmilePay, 66% of our members purchased using SmilePay, which is down from 68% from last year's quarter. we took a conservative approach and implicit price consensus and increased our reserves by 12 million given the uncertainty of the economic outlook. SmilePay, do they need it? I mean, debatable, really debatable. Net loss line, again, that's ugly, $107 million. Not a good number on that aspect, really not something you like to see. So let's look at that balance sheet real quick and see what this company has to offer. We are just seconds away from passing out, so don't mind me. Cash and cash equivalents on this company of 224 million versus last quarter they had 318, so definitely a big decrease there. Total current assets of 509 million versus 590. Big decrease there. Total assets in general, though, not too far off, 847 million versus 885 million. So hopefully we see some debt paid off from that. Total current liabilities actually increased quarter over quarter, so that's potentially a concern for you. And other long-term liabilities increase as well. I mean, liabilities increased a decent bit, but overall you see they have twice as many assets as liabilities. But unless they increase the net income line, there should be there's room for concern on this company. They're losing 100 million, and they've only got 400 million extra in terms of cashish. They'll find a way to make money for sure in credit, but this company's got a big bright future ahead of them. Not just talking about teeth, because it's bright after using their products, but I'm excited to see what they can offer for the future. As traditional dentists, I don't say they go by the wayside, but more online is just going to take over in terms of the dental industry. So they seek to benefit quite a bit, and their products do work if you look at the reviews. So I'd like to see what they can do. Not necessarily a stock I'm buying quite yet, at a market cap of $3 billion, but revenue annualized of not even $1 billion. So not a stock I'm buying quite yet. Depends on how far this goes. I think under 7 I might consider it. I would have preferred it down in the 4 range, like it was earlier this year. But I'd probably wait until around $5 to pick this stock up right now, just because of the concerns of profitability. And they didn't really give me a warm fuzzy feeling saying they were planning on being profitable in the near future. So that's all I got for you, and I hope you enjoyed. I am going to sleep potentially now. I don't know. It's impossible to.